Welcome to Balancing the Ledger, where tech and finance intersect. I'm Robert Hackett.
I'm Jen Viechner.
And today we're joined by Kyle Samani, managing partner at Multicoin Capital. Thanks so much for being here.
Hey guys, super excited to be on the show.
We're going to discuss your crypto fund in just a minute, but first we're going to discuss the news of the week. First up, Facebook is reversing course on a cryptocurrency advertising ban that they initiated in January. Do you think this is positive news?
I think it's good for the ecosystem and that it's allowing experimentation. Right, engineers and entrepreneurs are doing a lot of dev work, and that's been continuing regardless of their paths to advertising and getting word out there. The fact that this obvious, powerful channel is reopened is good because, step one is build, step two is tell people about it, and so that's a very good thing.
And they're better to tell people than on Facebook, which has billions of users at this point.
Exactly right. So that's clearly good for the ecosystem in terms of driving adoption, and especially because we're on the verge of releasing some new applications. So things like Augur are about to come out, and other kinds of applications, Funfair, Dharma, these kinds of things. And so as these new applications come out, it's important that the people who've spent all this energy building them can tell the world. So that's super important. Obviously, the flip side is the crypto ecosystem is kind of wild, wild west, and there are lots of below the bar teams, let's just say.
There are lots of scams out there. I mean, that's why Facebook did this in the first place. Everybody's trying to sell their coins, get rich quick.
Are there reputable companies advertising too, though?
To date, there are none that come to mind. I'm sure there have been. But moving forward, I expect there will be, like Robinhood, for example. Robinhood should be able to, in my opinion, right? They should be able to advertise their crypto trading service. And that seems like a reasonable thing for them to be able to advertise.
There was some other news this week, too. We have Andreessen Horowitz, one of the leading Silicon Valley venture capital firms, opening their first cryptocurrency fund, $300 million they've put into it. It's the first major VC firm to open a crypto fund. You also have a crypto hedge fund. I mean, does this industry need more competition in the fund world? Does this make it harder for you to raise money?
I think it's a super good thing for the ecosystem. Chris Dixon, who's one of the GPs there, and I think Katie Hahn's the other. Chris is an LP in our fund in Multicoin, so know them for a while. Overall, it's a great thing for the ecosystem. We're talking to a lot of endowments today who are looking at the crypto ecosystem, and there's just a real challenge for them in kind of career risk because it's unknown space, a lot of unknown fund managers, and being able to take a top-tier firm with a very well-known general partner there who's been there for 5 or 6 years now, and to kind of launch a dedicated vehicle. It's a very good way for existing institutional LPs to be able to invest in crypto through a known entity or a known vehicle. So I think it's kind of the trickle of opening the floodgates of institutional capital is starting to come in through Chris and Katie's new fund.
Tell us a little bit about Multicoin and how your strategy is different from some of the other funds in the market, whether it's Polychain or now Andreessen's fund or any of those.
One of our major differences is that we really focus on delivering venture capital economics to our LPs, but with public market liquidity. And so what we mean by that is, you can think of our fund like a venture fund in terms of risk-reward profile. We're taking pretty high risk, pretty concentrated bets in things that we have high conviction in, but we recognize that the markets we play in either are liquid or they will be liquid within a reasonable time horizon, let's say 12, maybe 24 months. And that differs obviously from a venture fund, which is like 7, 8, 15 years, much, much longer time horizon. Crypto, because you're liquid, if you're over some period of time, it turns out your investment thesis was not correct, then you can typically pull your capital out and put it elsewhere. And so because of that fact, we believe we actually need less diversification to deliver the returns we want to deliver. So that's kind of one major difference between us and a lot of the other folks in the industry.
I want to talk about one of the big positions that your fund took, which was in the EOS blockchain. It's been the most successful ICO of all time. It's raised something like $4 billion. Why are you so bullish on this project?
We're really excited about EOS because it is making a different set of trade-offs than most of the other teams in the space. And those trade-offs are going to allow EOS to deliver a much higher performance and much lower latency, which will ultimately enable software developers to build much more capable applications. I think that's going to allow more people to get into crypto, more people to use these things, and get that snowball rolling.
At the same time, there have been a number of security issues with EOS lately. They've had to, shut down the blockchain basically a couple days after the mainnet launch, and they've had Chinese researchers find serious security holes inside of it. Has this deterred you at all?
We're committed investors. We're not going to be dogmatic, but for now we're holding our position. We haven't sold any. The EOS launch did not go as smoothly as we were hoping it would. All things considered, actually, it hasn't gone as badly as I think people say it does, given on a relative basis. People seem to forget, but Ethereum in its early days, back in 2015 when the blockchain launched, was when it launched with no tooling, no infrastructure at all. You have to use the command line to interface with the thing when it launched.
And it got hammered by distributed denial of service attacks through the first year at least.
Through the first year, I mean, people were really trying to beat this thing into the ground. And the system was, pretty just challenging to use for quite some time. EOS was better than that. I concur that it wasn't as good as it should have been given the resources they had. So they made some mistakes and slipped up. But on a long-term time horizon, those are the rounding errors. They don't really matter. They've been working through some weird governance things and some other challenges. Overall, it was to be expected. There were going to be bumps in the early days, and there have been bumps. I think the bumps were a little larger than many EOS supporters would have liked, us included. But the core investment thesis hasn't changed. And we continue to talk to application developers building on EOS, Ethereum, and other blockchains. And we're seeing that desire and interest from these teams to build on a blockchain with just more performance.
In terms of Ethereum, I mean, you own a significant amount of Ethereum itself, but you're also investing in some Ether competitors. When you look out into the market in the future, I mean, what are you most bullish on?
Yeah, so we always make sure to look at things probabilistically. Today Ethereum is without question kind of the leading smart contract platform, most mind share, dev share, market cap, mining community, software infrastructure on really all fronts. Ether is the leader today. A lot of other really smart people have looked at the decisions that the Ethereum team has made in terms of designing the system, and they just have fundamentally different views about the trade-offs they should make in designing their system. So EOS, for example, is much more centralized than Ethereum, and that allows them to deliver performance. You look at Cadena, for example. Cadena is using a proof of work system and not proof of stake, and they have this kind of braided or threaded proof of work system that allows for a very new form of scalability. Teams like Dfinity they've enabled this thing called threshold relay and probabilistic slot consensus that allows for really high throughput proof of stake systems. So as we look at the space, we see just this massive wave of experimentation happening. We make it really our priority to dive in deep with each of these teams, understand their worldviews, understand the trade-offs that they want to make in their system, why they believe their set of trade-offs is the right one, and then we're allocating capital across a number of these, watching them grow, building relationships with those core engineers and core protocol designers, and then also understanding how their ecosystems are developing.
If you had to pick one, though, token on the market today, which one do you think is the most likely to succeed?
I mean, if you told me to pick one token today and come back in 10 years, I'd pick Ethereum. I think the only other real option that is justifiable answer is Bitcoin. And it's because those are the two largest, the most well-known, for sure.
And you're a long-short fund, which means in addition to betting on the success of these various tokens, you also bet against them or believe some are overvalued. Can you talk a bit about that, and how are you feeling about the market in general right now?
Which coins are you shorting?
We're definitely very long biased, and it is our general bias is to be fully deployed or close to fully deployed. And that's where we want to be. We are not fully deployed at the moment, and we are not fully long right now. We have a few shorts open. That's largely a reflection of market cycle and then a few idiosyncratic views about certain assets. So right now we have, for example, shorts open on Ripple and Litecoin. Litecoin, in my view, has no reason to exist. It was a fork of Bitcoin. It's just been sitting around.
It's a harsh assessment.
The only investment thesis I've ever heard for Litecoin is it's a testnet for Bitcoin, but that's not an investment thesis. And so, it trades. It's got a 2, 3, 4 billion market cap, whatever the number is. But it doesn't really have a reason to exist. It's clearly more risky than Bitcoin, just kind of structurally in terms of brand and everything else. When we look at Ripple, Ripple they keep selling into the market. Based on kind of the SEC's guidance from a couple weeks ago about Ether being not being a security, it's quite clear to us that Ripple is a security. We don't know when that news is going to drop, but the catalysts seem to have kind of gone away from Ripple, and we have very high conviction that it is a security. And so as kind of the system plays out over time, we think that short will deliver idiosyncratic returns.
So the security label is kind of a designation that kind of dooms these cryptocurrency. I think it's kind of a fatal designation.
So the challenge with being labeled security in the space formally is that not a single exchange in the world today that trades crypto is a SEC registered exchange. If you go to the SEC's website and look at exchanges, SEC certified exchanges, there's like 10 or 12 of them. It's NASDAQ, NYSE, CFTC, the CBOE, right?
Well, a bunch of them are pursuing financial regulations that will allow them to do that.
And some have broker-dealer licenses like Coinbase and some others.
Right, so Coinbase has got an ATS now. They got a broker-dealer license, but that's a long way away from being an SEC registered exchange. And that's a multi-year process, and that's well known to be a super, super difficult thing to do. And so my point is that if Ripple is labeled a security formally by the SEC, all of the crypto exchanges are going to stop trading Ripple because they are not SEC certified exchanges, SEC registered exchanges. And so if that happens, liquidity is going to dry up on XRP and the price will plummet.
Well, we'll just have to see how the coins fall. We should have you back
Or
on
not.
to discuss how your bets go in the future. But thank you so much for coming on, Kyle.
Guys, this was awesome. Super glad to be here.
That's all we've got time for. I'm Robert Hackett.
I'm Jen Viechner, and for more Balancing the Ledger, come to fortune.com.
See you next time.